And in our top business story, Dubai has been identified as a key contributor to the development process in Africa. At the ongoing Africa Global Business Forum in Dubai, the participating heads of state added that more needs to be done to develop and improve the infrastructure for facilitating the commercial and industrial progress. More than 500 key international decision makers are taking part in the ongoing forum, where discussions are being held on the business and investment potential in the African countries. Speaking during the panel discussion, His Excellency Paul Kagame, the President of Rwanda, together with the President of Ghana and Ethiopian President, stressed that the shortfall of infrastructure is an overarching issue that most African countries, particularly the landlocked ones, face. It was identified that despite the growing international trade, the poor infrastructure adds to the costs of transporting goods around the continent, affecting the investors. Presidents of the countries stressed that the economic growth is a weight on the current infrastructure levels. As the energy demand in the countries continue to grow at 12% year-on-year and strive towards industrial transformation, the heads of state have called for more efforts towards infrastructure development, which will be a key driver for investments and sustainable development.
Integration, like we have had in the East African region, where you have Kenya, Uganda, Tanzania, Burundi, Rwanda, bringing together 135 million people, you stand a chance, a better chance, looking at it this way than if you disaggregated and looked at each country standing on its own. And some of the investments also that are to be made, say in terms of infrastructure, whether it is railways or pipelines or energy and so on, the amount of investments to be made are huge.
It's in Africa's interest to grow our businesses across our natural border, our political borders. One of the major hindrances to Africa's growth is the low level of trade amongst ourselves. Our trade patterns are still connected with the colonial traditions that we inherited, and so in Ghana we are exporting more into Europe than we export to other parts of the world. And I believe that at 11% trade amongst ourselves, I mean, that's shamefully low. And so it's good to have a bigger picture of the continent.
Whilst the African countries embark on their economic ambitions of developing into middle-income countries, Dubai's role as a facilitator is expected to grow. Speaking at the forum, His Excellency Hamad Bouamim, President and CEO of the Dubai Chamber of Commerce and Industry, stressed that the future of global investment and business lies in Africa's untold opportunities. As a result, they're looking to expand their presence in the continent by opening up new offices and capitalize on its potential.
In terms of investments, this number goes to between 20 to 30 businesses during the past 18 months that went to these markets, established, and hopefully they'll start to see positive results going forwards. We'll start establishing our own offices right now at Addis Ababa, Ghana, and Mozambique. We expect those to grow up to maybe 20 offices across the African continent, to be able to be there in the place to really do the connection, the facilitation, but on the ground itself, and grow the relationship even further at all levels, at the trade, at the services and investments.
The UAE's railway developer Etihad Rail is set to secure government funding and award contracts to build the second phase of the $11 billion national rail network, according to Etihad Rail Acting Chief Executive Officer. The second phase of the UAE railway project, which at 628 kilometers is the longest of the three planned stages and is expected to be funded by the UAE federal government and will connect the Musafah port and industrial area and ports in Abu Dhabi and Dubai with the Saudi and Omani borders. State-owned Etihad Rail secured a $1.28 billion five-year bank loan last year to build the first phase of the project. That phase, covering about 264 kilometers in the west of the country from Shah and Habshan near Abu Dhabi to Ruwais, is now complete and has begun operational trials. A consortium comprising Italy's Saipem Technimont and UAE-based Dotsai Engineering and Construction was awarded the main civil and track works contract for Phase 1. And earlier this year, Etihad Rail created a joint venture with Germany's Deutsche Bahn and Etihad Rail DB to operate the Phase 1 railway and act as consultant for the other stages. The Sharjah Commerce and Tourism Development Authority has unveiled its tourism statistics for the first half of the year, showing a significant increase in the number of visitors to the emirate. The figures crossed the 1 million mark, jumping 15% over the same period last year, when the emirate received 955,355 visitors. The first half statistics reflect a stable occupancy of nearly 74% at hotels, even during the normally low summer months in the emirate of Sharjah. Hotel establishments recorded 1,817,416 guest nights, including 110,621 guest nights for hotels and 711,206 guest nights for hotel apartments. The half-yearly results showing an encouraging 6% increase in the guest night in hotels for the low season, indicating very positive growth figures ahead. According to the SCTDA statistics, European tourists once again came out on top. Sharjah received 409,578 European visitors in the first half, accounting for 37% of the total number of tourists. Russian tourists made up 25% of the total number of European visitors. The second spot was taken by visitors from the GCC countries, in which Sharjah received 369,485 visitors from the Gulf states, accounting for 34% of the total share of tourists. Emirates Airline has signed an agreement with the Republic of Angola to manage African flag carrier TAG Linhas Aéreas de Angola. It was confirmed on Tuesday. According to reports, the management concession agreement is subject to approval, but the deal will see Emirates take a role in the management of the Angolan carrier, which the African government is a majority stakeholder in. As part of the agreement, Emirates will not take an equity stake in the Angolan carrier, but aims to work with the government to formulate and implement a business plan, provide management support, and devise fleet and route network strategies whilst bringing synergy through the complementary networks. Emirates currently serves 22 destinations in Africa since it launched into the continent in 1986. TAG's most recent financial results printed in the press show it registered a growth in passenger traffic of 11% for the year ending 2012, with 1.1 million passengers flown. Revenue rose 22.6% to $650 million, but it did not give any profit or loss indicators.